Today's topic is very much geared more towards the small and medium businesses. We've got two fantastic guests. We've got Theo Vermaak and Waldek Wasowicz, who I will introduce in a moment. If I can please just ask everyone to mute their microphones. And we can obviously keep if you can, keep your questions to the chats. And if you can pose your questions on the chat itself, at the bottom of your screen on your toolbar, we'll address as many of those as we can during the discussion. For those that we can't, we will certainly keep a record of and try and have as many of those addressed offline and revert back to you after the session. A recording of the webinar will be available on our website within a few days, and we'll obviously keep you posted towards that. So without further ado, I would like to introduce everybody to Theo Vermaak and Waldek Wasowicz. Theo and Waldek are two representatives of PKF, the PKF group. PKF, for those of you who don't know, is one of South Africa's largest mid-tier accounting firms. The quality of their audit, their accounting, tax advisory and business advisory solutions is unparalleled. PKF partnered with our previous partners, Octagon Accountants, Octagon Chartered Accountants, a little under a year ago, if I'm not mistaken. Theo today fills the role of the national chairperson of PKF South Africa, but is also the acting interim CEO of PKF International. So Theo, thank you. I mean, your presence on this chat is really quite something, and looking forward to the global insights that you bring. Waldek is a partner in the South African business. He is a dynamic individual with a really wealth of knowledge and experience advising and working with small businesses, and we look forward to what we have lying ahead of us in the next hour and a bit. So thank you to the two of you for your time.
And thanks for having us, Stephen.
Pleasure. On behalf of Menachem, who unfortunately had a family emergency and couldn't make it this morning, really thank you for really making the time to be with us. I'm going to kick off, Theo, if maybe I can address the first question to you, largely around the offer of the COVID relief programs, the various options that are available to businesses, and what you've experienced over the last sort of 8 to 10 weeks. Within your client base, the experiences that businesses themselves have had, the successes, the hiccups, the adequacy or inadequacy of these relief programs. Can you give us some of your thoughts on that?
Sure. Thank you, Stephen. I think Waldek and I wanted to kick off with this question. Just many participants. I think it's fairly old news what is available, and a lot of professionals have written about it, and there's a lot of information out there. But we really wanted to share a bit of our experience, just with some of the challenges around those. And I'll certainly ask Waldek to jump in if I miss something. Waldek practices more actively than I do. Certainly, I think I'll start with industry-specific relief. There are a number of industry-specific relief measures available, notably in the tourism and hospitality industry. And then more broadly than that, there's the TERS funding, which I think a lot of people are aware of. There's small business finance debt relief, which is available. And some of the challenges that we've noticed with all of those is specifically with the TERS UIF relief that has been offered, especially in the beginning. I think there was just an enormous volume that these systems had to deal with, which perhaps they weren't that well prepared for. But equally, there was a lot of uncertainty at the beginning as to how exactly the funding would be structured. I'm going to share an example of my own. I also have a distillery and a cocktail bar, which I run in whatever free time I have. And we applied, amongst others, for the TERS funding. And the first relief that we got, our focus as a business was very firmly on paying our staff. That for us was a major priority. Given the landscape that we're in, given the state of the South African economy, the levels of unemployment, and also just the nature of a lot of the unskilled staff that we have in that business. So that was a key priority for us. We had paid the initial round of salaries. When we then submitted the funding, we weren't sure whether we were going to get a top-up to cover the normal salaries, we were going to get a refund for the... So in the beginning, we got very small amounts, to be honest. They later rationalized that and we got the funding to the UIF limits that you would otherwise have received. But that was just an example of the sort of lack of clarity, I think, with some of the relief measures that were available. Where businesses, it makes it really difficult to plan and plan ahead. I am going to just ask if Waldek would like to add anything to that specifically.
Yeah, I think in general, Stephen, when you look at the entire COVID landscape, every department had to rush. And I think whether you look at health or you look at safety or the economics sector of COVID, everyone was scrambling and rushing and putting systems into place. And as Theo said, I think, what we've experienced is the fact that simply government departments were not ready and prepared for the wave of applications that was coming, in the same way that hospitals are not ready for the what they're calling the second wave, and that's why we had this lockdown. So UIF, I think especially, when you go take a step back, the Department of Labor has never been a good administrator, and the outsourcing of the monthly administration of collections was done by UIF to SARS. So they have never been a great administrator. And now you find that on top of this ever-changing legislation, I think we had 8 or 9 iterations of the regulations within a space of a 4-week period, which made it tremendously difficult for business owners to apply because it was a moving target. And because of the lack of systems within UIF, there was a lack of feedback back to the business owners to explain to them as to why they're not getting paid. Is it simply a delay, or were there technical problems with the application itself, which then disqualified the business owner from being able to claim these amounts? So I think that is always a perennial challenge with the government departments. Is they simply are not great administrators. An example is the fact that we are sitting on the 28th of May today, and I think as of this morning, I don't think that the UIF claims for May have opened up yet. Logically, you would have liked to have submitted your claims to be able to receive the money for your payroll run at the end of May. So now you're in a situation where business owners have got to front load that expense and wait for this money to come back from UIF at a later period. And in a similar way, I think SARS have allowed dispensations relating to pay-as-you-earn and to provisional tax, but those are not grants. Those are simply interest-free loans, what I call them. It's really deferrals of liabilities. Really just deferrals of liabilities. So from that point of view, we're kicking the can down the road. We're not reducing the obligation, but it still assists the SMEs during this time. And again, the challenge has been that target's been moved initially from 50 million to 100 million. And there is a pay-as-you-earn's running a little bit better, but on provisional tax, we have found that there are still discrepancies within SARS, and actually the process of application for that deferral is not as simple as one would think. It's, we would have assumed that it was an automatic provisional tax deferral, but even SARS at the moment is scrambling a little bit with that. And then, moving beyond SARS and government options, Theo mentioned there are sector-specific funds in place. It is apparent from our client base that one thing is to apply and another is to actually get the money. So, I think unfortunately, because of the historical legacy of our government, a lot of business owners are quite apathetic when it comes to government grants and government schemes. And, we found that actually quite a big percentage has not even applied for government grants because they just...
Up to 40%, I think, Waldek, of the survey that we've done, up to 40% of businesses have not even bothered to apply.
Yeah. So
what has been your input, your value add to your clients in trying to, obviously encouraging people who haven't, first and foremost, but those who have and are hitting the proverbial brick wall of an incapable state, and not needing to explain much beyond that. What is your advice to your clientele? What has it been over this period, where they've hit the stumbling blocks and the inadequacies in processes?
It sounds a little bit glib because, and I don't want to come across that it's a sale process. But unfortunately, you have to, in this environment, unless you've got a dedicated HR person in your business who can chase this up, can read up the legislation, and can be up to date, my advice would be to scope in a consultant or an expert in a field to help you with the process. Because as a business owner, you're already running around and you are just trying to survive. You're keeping your business afloat. Simply to have the time to keep up to date with every single piece of legislation coming out is way too difficult. And many times what we found is that business owners prepared the documentation, but on the outdated version of the legislation. So there's nothing wrong with it. Just that by the time they managed to collate this information, let's say it took 2 weeks, there were 3 other iterations. So, and then if you submit that information too late, you've basically disqualified yourself. So unfortunately, I do feel that, and we'll maybe touch on it, but we did conduct a nationwide survey of our SMEs. And one of the biggest pain points is the complexity of the legislation and the complexity of the application process, which by default disqualifies a lot of businesses from being able to access these grants. So unfortunately, it's leading to people having to spend money on consultants and experts to help them with that process, which in all truth and honesty should not be necessary in my mind.
Yeah. Have you seen, just on the topic of these, call them consultants, I mean, has there been opportunists coming to the fore? I mean, if we all look around, I mean, 2 months ago, nobody knew what PPE even stood for. And now you can't scroll through any web page without seeing an advert for somebody who's providing PPE. I mean, the opportunism that people have seen. I mean, has there been a flurry of consultants offering their services relevant to actually expediting the process? Or is it the same players who've been there all along?
To be honest, I haven't really focused on the entire ecosystem to see. I mean, there's obviously guys that pop up, right? That you see, like in any industry, that people at the moment when things overheat, they do pop up. But I've seen mostly that it's your traditional accountants, bookkeepers, and tax providers who've actually simply undertaken that as an additional service to the clients, because it's part of your normal submissions. And usually you find most accountants would have some kind of a relationship with SARS and UIF and Department of Labor, because of the submissions that they have to make.
Yeah. One question, I mean, unfortunately a difficult one, which I'd hope to actually only ask later into the conversation. But I mean, if you take a look at the landscape, we're obviously seeing the headlines as far as unemployment. We're seeing the headlines as far as the potential closure of businesses and retrenchments and the likes. But broadly speaking, I mean, if you were a small business owner right now, going through the process, assuming, of course, that the process is successful enough, if I can use those words, with regards to applying for the relief and getting it. A, is this relief sufficient? And B, do you think most businesses can make it through? Or are the headlines potentially, the scaremongering headlines, those of 40 to 50% of businesses not making it through on the other side of this? Your gut feel opinion on that?
Waldek, I'll kick off. I think just the first question is the relief sufficient? I think it's easy for us to always be critical, and we have been, and with good reason. I think equally though, the government's response, you can argue the overall tone of the response, and there are very varying views around that. But I do think that it is certainly a credit to them that these relief measures are available. Whether that's sufficient or not, I think that links back to the complexity, back to the difficulty of access, etc. I think for businesses who can access that, it certainly buys them time. Stephen, my biggest concern with this is in the absence of certainty, it's very difficult for anyone to plan. Yeah. If anyone had a long-term forecast for their business at the moment, you really can just throw that out the window. And it links to our move through this process. As South Africa moves through the levels, and as businesses return to work or potentially not return to work, but now also potentially going back to a level 4 or level 5, for example, in certain hotspot areas, that lack of certainty makes planning very difficult. So I think in that context, right now, the relief for many businesses may be sufficient to see them through the immediate future, but how long is a piece of string?
Yeah.
And I think that is the challenge that we face. And then just very briefly on your second question, will businesses survive through this? I think there's absolutely no doubt that many businesses simply won't. It's a harsh reality. We have already had many clients of our firm consider options of going into business rescue, as an example, as a defensive mechanism to help them through this period. And as a way, and some businesses argue that it's cheaper for them to shut down now so that they don't end up with wage bills and rent bills and the like, and rather come back when the environment allows them to and start from scratch. So I think there's absolutely no doubt. I think there is, the media loves drama and loves bad news, but I do think that there is a massive risk that a lot of small businesses in South Africa will simply not survive. Waldek, I don't know if you have a different perspective, but that's I think that is unfortunately a reality.
Yeah, I think that it's a complex landscape, because I think on a micro level, you have many businesses which have really been very entrepreneurial and have realigned themselves and have managed to make the changes to ensure that they get through this period. But at a macro level, when you look at when we even start with the 500 billion rand package, a bulk of that package is in a form of loans to entities. Yes, there are certain grants, TERS being one, but the rest really is in a form of soft loans. So you've got some sector-specific grants, but moving beyond that, those grants are not really that material. Moving beyond that, the biggest component of that 500 billion rand package is the COVID-19 loan scheme, which is facilitated by the banks. And I'm glad it's facilitated by the banks, because to be honest, I wouldn't trust a government department to facilitate a 200 billion rand cash pot to disperse to businesses. But that has its own challenges within itself, because banks have been very scared. Banks are risk averse. And we have found that with our clients, the application process relating to the COVID-19 loans has been very complex and time-consuming as well. So I think that, yes, on paper there are benefits, and there are mechanisms that can allow you to obtain the funding that you need. I'm scared that because of the bureaucracy and the time frames, many businesses will simply not get that funding when they require it, which is now and not in September, October. And look, when you look at the initial wave, I think our stimulus package or rescue package equates to roughly 10% of our GDP.
Yeah.
If you look at what's happened overseas now, America just announced a much bigger stimulus package, which is coming into the economy. And most developed countries are pushing now into 20 and 30% of GDP as the predicted stimulus package. So as Theo said, I think initially the numbers sounded astounding, but when you actually benchmark it to what the other countries are experiencing, I think it's going to be very tough for us to survive on a 10% of GDP as a package if other countries are surviving only on 20 or 30 in a much more secure environment. So I do feel that the speed with which funding is available needs to improve of the existing 500 billion, but I have no doubt that we're going to need additional funding, or a lot of businesses will close. And I think, of course, then, Stephen, then you have to look at the post-COVID world, right? And that's another discussion in itself. You could get through this COVID period.
I'm hoping that we're going to really direct the conversation more towards the post-COVID world and your opinions on the new normal in a few minutes. But one quick question. I mean, you guys have built your business, really engaging as many have with entrepreneurs, and it is the entrepreneurs who are significantly the greatest at risk here. I mean, Theo, you spoke a moment ago about your business in the distillery, and what you've experienced there. two questions. I mean, Theo, I'll come back to you in a moment. Just if you can talk us through what you guys have done within your business to beyond just the applications, but how you're approaching this. But my question to you is just an opinion question on: do you think that there will be sufficient risk takers on the other side of this? Entrepreneurs are the backbone of an economy. Small businesses are what strong economies are built on, as opposed to your larger listed entities that are always, the headline makers. But with what we've just said, the relief packages, the assuming all of that, the sufficiency of it, the adequacy of it, the timeous nature of all of these things, assume those boxes are actually ticked. But for the businesses that close, how easy is it for an entrepreneur somebody who wants to be an entrepreneur to actually start up a new business in your perspective of a post-COVID world?
Stephen, I'll start by saying I think there's always opportunity in any crisis and any situation. And I have absolutely no doubt that entrepreneurs will emerge post-COVID who will take advantage of a lot of the gaps that have perhaps been left by businesses closing, but also potentially some of the new areas that will emerge as business hotspots. So absolutely no doubt. And the reason I feel that way is I think the resilience of South African entrepreneurs over the last decades is really remarkable. I think for so many small businesses in South Africa to achieve what they've achieved despite a number of the structural and the sort of macroeconomic challenges that we face really is testament to, I think, the spirit of South Africans. So I absolutely believe that there will be opportunity post-COVID. The question about ease of that, though, is I think it's no secret that there are a lot of barriers to entry into business in South Africa with our bureaucracy and complexity that we've touched on, etc. So is it easy for people to start a new business? Is it easy for people to get back onto their feet? Absolutely not. But I do think that we have an inherent resilience within South Africa, and no doubt businesses will emerge. What will be interesting to see, though, is which industries they will emerge in. If you're looking at longer term forecasts and the outlook for where the world is going, it's no secret that so many restaurants and bars, again, just an industry that I'm familiar with, will not survive. But to what extent will there just be a flurry of new businesses in that industry opening up? I don't know, because I think that will depend very much on the behavior of the population.
Sure. For sure.
Yeah, I think, Stephen, when you look at it in terms of the World Bank Index of Ease of Doing Business, we may be overall, I think, 84th on the last rankings. But two categories concern me. One, as Theo touched on, the ease of starting a business. We are ranked 140th out of 190 countries, which puts us in a illustrious category of Albania and Cuba in terms of starting a business. And the second one, which I think is a big opportunity for South Africans, especially in this market, and our weakening rand, is our ability to conduct a business across borders. And in terms of our exportability, our regulations are ranked again 145th out of 190. So our government needs to really step up and create an ecosystem which allows entrepreneurs to open up businesses, to become a little bit more savvy with tax breaks and incubators, and really supporting small business. Because, if you look at SMEs, I think SMEs account for roughly 60% of our employment in this country, 30%, 34% of the GDP. So SMEs are a vital component of our local landscape in terms of supporting employment and supporting the economy. But in many other ways, they are very underrepresented when it comes to government mechanisms of protection and the funding channels that are available to them. And I think there's always been the struggle of the local market. And for us to really be competitive and to reignite this economy post-COVID, we've got to make those key components a lot easier. By contrast, I think if you look at Mauritius is sitting 13th in the world at the moment for ease of doing business. Kenya's in the top 60. So I think we don't again have to go and benchmark ourselves to the UK. but let's try and be a leader in Africa at least, which we clearly are not at the moment. So I think we've got a lot of work to do in that area.
PKF recently conducted your SME COVID survey, and I'm sure you picked up an enormous amount of data and feedback from the respondents. But what were the big surprises that you encountered in the answers to the questions that you posed?
The first one we've already touched on, and I think that was the number of businesses who had not applied for any of the relief measures available from government. Waldek, I don't recall the number offhand, but I do think it was close to 40%.
40%,
and that's remarkable. It really astounded us that so many people did not even bother. We also had a question with regards to how many people have actually accessed the funding, and that we expected to be a relatively low number given the circumstances we've described. But that certainly for me was one of the big surprises that came out of there, Waldek.
Yeah, and I think not really a surprise, but a kind of a confirming factor is that a lot of the businesses simply do not have the reserves to carry them through this period, because we've come out of 2 or 3 very turbulent years and difficult years. And I think that many people were looking at 2020 to be the year of improvement and change over 2019. So the average SME business has less than 3 months cash flow on hand, and that is a dangerous number. But I think it's a perennial problem of the South African economy, that whether it is individuals or businesses, we simply don't have enough reserves to carry us through. But I think it's really a sign of where we've come from as an economy. It's been incredibly challenging. And the other point was that, and I think it confirmed our suspicions, was the call by the SME owners for making these channels and these different funding streams a little bit easier to understand, and making the application processes simplified, because they're simply too convoluted and too difficult to understand for the average business owner.
I hear you. Waldek, a question for you. A few moments ago, you mentioned the point around the ease of doing business. And you mentioned what ultimately needs to change, the quick wins. 2 questions for you. I mean, one of them is realistically, in your mind, what do you see on the horizon as far as potential changes coming up businesses' way, in the form of improvements to government policy that impacts on the environment for small businesses?
Well,
I think for one, in a moment.
Yeah, I think for one, we have to make the starting of an opening up of companies and just simply registering with the different bodies far easier. If you look at countries like Australia, many European countries, when you register your company, you immediately within a 24-hour period, you are registered with every relevant government body. The fact that in this country you struggle to register for VAT, you want to be compliant, but the system of registration is so complex that you almost have to break the law to become registered. Yeah. That simply doesn't incentivize compliance. So we've got to, in my mind, simplify the process of starting companies. We've got to simplify the system of companies being registered on the different databases with UIF, Department of Labor, with Workmen's Compensation, and SARS for the different taxes. That should be an automated platform-based 24-hour turnaround. Here you go. Here's your company. Now go and trade. Then secondly, we have to look at our tax regime at the moment. There is no dispensation for small new business in terms of tax breaks. Yes, we've got a small business corporation allowance, but we really should be looking at other countries that have created economic zones and have created maybe payment holidays for the first 3 to 5 years for startup businesses, to allow them to get off the ground, reinvest the money that they are making into the business, grow that business, and once it's sustainable, then SARS can come in and start taking money in terms of income tax. The challenge is that 2 out of 3 small businesses fail in the first 3 years. So what's the point of taxing them to death in the first 3 years and then you lose that business? Let's rather support business, look at attrition rates, improve survival rates, and then worry about how we're going to tax you. Because our tax rates are some of the highest in the world at the moment on a corporate side. And we have to become more competitive because, as people are becoming global citizens, then I have the ability to look at different regions of the world and say, well, maybe I should go and start my business in Mauritius or in Botswana because the tax regime is so much friendlier to me. And I think the last point really is our labor environment needs a rethink. And it's not exactly my area of expertise, but we need to have a more fluid labor environment because the current environment simply does not allow businesses to grow and scale quickly without taking on too much risk. And we should have an environment that, yes, we need labor protection. I'm not against that, especially in our ecosystem and our demographics, but it needs to be flexible enough where businesses can grow without the fear that if they then have a downturn, they're going to be left with people that they simply can't get rid of. And we have to rethink
or
that
expensive
as well.
to get rid of them, massively expensive to get rid of those staff.
Yes, exactly. And again, when you compare us to other countries in Europe and America and Australia, our labor law is, even to bring in expertise from overseas is very difficult. So we're looking for foreign investment, but you want to bring in an MD to run the local operation and they simply can't get a visa for 2 or 3 years. I think our whole labor environment needs a rethink to make us more competitive.
I hear you. What I want to do, ask Theo, I mean, as the global chief executive of PKF, I mean, you have your global footprint. What differences do you see, positive differences that South Africa is doing over this time relative to other countries?
Stephen, it's interesting. I mentioned right at the beginning that our government's overall response is has been widely criticized, but I do think equally that we have to commend the fact that there was an immediate and swift response. You can argue the severity of that response over time, and I think years from now people will still be analyzing that. I do think the speed with which we responded in South Africa, certainly at the beginning, has had a major impact on the spread of the virus in our country. So just comparing that to some of the other countries that we're dealing with, if you look at the United States, for example, they have the added complexity of having as we were saying, what dogs can do. Where they have
you have to pick him up and show him to us.
He's a bit big, but there's a fairly autonomous state system as well. And I was on a call with our North America board about a week ago, and one of the members in Texas, as far as they're concerned, they didn't even experience a lockdown. Whereas you switch over to California, where the lockdown is as severe as some of the more severe ones we've seen in Europe. So you've got some added complexities there with the different approaches in one country, but with different states approaching it differently. I fear that we may be heading that way with the potential imposition of different levels within South Africa, which will just make it really an interesting environment to work in. But I do think that's a positive. I think the attitude of beyond that, and in terms of how businesses have responded, I think it's fairly comparable. I think we are seeing the emergence of global trends. I mean, we've all had to embrace technology probably in ways that we all wanted to do, but were forced into doing in a COVID world. The way companies have accelerated their working arrangements and people working from home. And that is, I think South Africa is fairly unique in that sense. We are comparable to what is happening in much more developed economies. So, compared to I think to some developing markets, we're probably ahead of the game there. And again, that speaks a little bit to the resilience and I think just the sophistication of our SME business market. So I think those are two positives that stand out for me.
Fantastic point. I mean, bringing up the point around technology. I mean, my wife works for Investec in the private bank. And on a team chat the other day, they were told that 90% of Investec's private bank staff are working from home. Obviously, dogs and children aside, it is working. There's no doubt. But just delving a little bit further down that point of technology. I mean, we've all become accustomed to this platform called Zoom and Microsoft Teams and Google Hangouts and for the kids it's Google Classrooms. But what other technologies are available? I mean, are you advising your clients to look at to assist them in the ease of doing business? I mean, software packages, platforms, infrastructure. These are all positives to embrace. It is once again feeding into this point of the new normal that hopefully we're moving into. But what are your advice points to clients?
So I'll kick off. I think Waldek will want to add to this. I think you make the point about Zoom and all of these technologies that we've all had to use. I think at one stage I also got to the point if I had to attend another webinar, I think there's a bit of fatigue. But it certainly has helped. I think on the sort of human side of business, a lot of businesses have embraced that as a means to stay in touch with their people and to have culture events and after work drinks and that kind of thing that's been hosted to foster that sort of team spirit and to help build the organization's virtual culture. So that was very important and tremendous. I think beyond that, I don't think there's a business out there who hasn't heard that they need to have a digitalization strategy. Certainly over the last 5 years, if you listen to anyone speak, and the risk of disruption and the importance of digitalization, etc. But I think for many, it was quite difficult to fully embrace. What does that mean? How do we go about it? What are the technologies available? At a base level, one of the initiatives from PKF side is it's one thing for us to be equipped to work remotely. So our staff are generally equipped to work remotely. Most of our firms are, achieving up to 90% productivity in this environment where everyone is working from home. But one of our challenges has been that not all our clients are equipped to do the same. So we have, as an example, a sub-offering called PKF Ignite, which is focused on cloud-based technologies. And that is a way in which we've been encouraging our clients to move to a truly digital cloud-based environment in terms of accounting and reporting and all their business administration happening in a cloud-based environment, which really does facilitate the ability to work from anywhere, but also comes with many, many other benefits. I'm not going to go into that. I mean, it's not a sales pitch. So I think generally our advice to clients has been, look at your business, look at the areas where it can benefit from technology. It's impossible for me to give you a list of all the potential technologies available, and it will be to some extent dependent on each business. And certainly if you're in a manufacturing environment, you need to go into your factory. But there's so many of the functions around that where technology, in terms of your supply chain, your distribution, but also your internal administration, where there is so much available that businesses can benefit from. And this truly is a time to embrace that if you haven't yet. Because when you're forced into a situation, it's remarkable what you can achieve. Something that you've been trying to do for the last 3 years, all of a sudden we had to do in the space of 3 months.
Yeah. Theo, just thank you for that. Just sticking with you for a moment, I mean, and really revisiting your global perspective as head of the international business. The point we were making a few moments ago around a manufacturing business, it's obviously difficult for a manufacturing business to have everybody working from home. It's nigh impossible. Surely you can maybe outsource your finance and admin, but not much beyond that. But it does bring up the topic of automation and the fourth industrial revolution, buzzwords that have been thrown out, particularly by the politicians in this country. Unfortunately, at a time when maths and science, we've got 10% of matriculants passing that, which doesn't obviously bode well. But your views on really South Africa's ability to embrace this fourth industrial revolution, and I'm not referring to sort of white collar business broadly, obviously across the board. Your views on that?
Stephen, I have some concerns with that, given the structural challenges that we've already described in South Africa. I think on the one hand, businesses, are fairly resilient. Businesses are, generally our businesses in South Africa are sophisticated enough to embrace technology. But I do sense that there is a gap if I compare us to similar businesses around the world, certainly in the developing world. to some extent, to answer your question, and I'm not really answering, but to some extent, to answer your question, I think we will get to a point where we have no choice. In order to remain competitive and in order to simply survive, we simply will have to do that. The fourth industrial revolution and the emergence of all these potential technologies, that is something, for example, that if you're talking about structural reform at government level, that is something where government can truly assist by partnering with business and exploring, create innovation hubs and exploring ways in which we can innovate. We have to balance it in South Africa with the need for employment. And I think that is, that should drive a growth strategy, not a protective strategy, where we shy away from technology because of the risks that brings to employment. But we should drive that from a growth strategy and have more people educated. So there's a skills issue, have more people educated and embrace the technologies. But government has a big role to play with business in facilitating that, with regards to structural reform.
I agree 100%. And I mean, if I can even add a second or third fly to the ointment, there is more than likely the role of unions going forward and organized labor. I mean, they've for long lived in a world of job protection. And that job protection comes at all costs, unfortunately, at the cost of more often than not business. But the opportunities that they can fulfill as far as job growth is concerned. Waldek, if I can shift that question over to you. I mean, South Africans, particularly middle class, upper middle class, and very much business owners and entrepreneurs, over the number of years with the changing landscape, have become almost persona non grata. I mean, your traditional white male-owned business is by far the least desirable business for a person to be identified as. Yet businesses have continued to thrive, and it's almost been, Theo, you mentioned the point around resilience. That South Africanism of persevere and succeed. Waldek, how do you see that environment shifting over the coming years?
So it's an interesting question. Look, I think that if you take a step back, the one word we've heard a little bit, and I'm just maybe going to digress a little bit. We heard the dreaded P word used during the COVID lockdown, the word of privatization. And I think hopefully one of the benefits of this period will be that government finally realizes that we have to get down to business and we have to make this work, because the moment that we are going to start approaching IMF for money and for handouts, we cannot continue on the path that we've been, because we're going to have no country left in the next 10 to 15 years. So, from that point of view, it almost seems that this period has marginalized, a lot of the ancillary voices. We haven't really heard, EFF going loudly against, us putting out this funding to businesses, or for us approaching IMF for money. So a lot of the kind of anti-democratic voices have been subdued by this, because I think everyone realizes that we actually have got to get down to business now, and we must stop politicking. And I think that if anything, hopefully Ramaphosa's position has improved throughout this period, because yes, he's made mistakes, but I mean, which world leader has not made mistakes during this period? You look at America at the moment. I mean, I think the one thing that's become very apparent from this COVID is that America is no longer the leader of the world, because the way that they've conducted themselves through this period has been shameful. Boris spent a month in hospital while his country was in lockdown. So I think we are many times very hard on ourselves as business people and as a country, but I think we have to put ourselves in the context of the world. I think it's become very apparent that there is a lack of effective leadership around the world, and not just in South Africa. But I do hope that one of the outcomes of this will be this getting back to just doing business and keeping the economy going, because we were already a patient in ICU before COVID, and we are now pretty much dead and we're being resuscitated. And hopefully you need that type of a wake-up call for everyone just to stand together And I think the one challenge of South Africa is that we are very marginalized and we are very divided. So it's, I come from Poland originally, so I always follow the Polish news, and the Polish business community got up off their butts, off WhatsApp, and off moaning on Facebook. And when the lockdown became too restrictive to business, they went out and they picketed outside of government buildings for the release of lockdown, because it wasn't equitable in terms of the economic, what it was doing to the economy. But I think, unfortunately, in South Africa, we all seem to be very divided into camps, and we need to come together as a South African business community to work together for the success of the country, because we're all dependent on each other in this ecosystem for survival. One good business cannot survive if 50 other businesses are going under around it, because your whole ecosystem and supply chain is broken.
We saw that at the beginning of lockdown.
Exactly. So from that point of view, I'm hoping that simply the necessity of it will make us forget our BE scores and, the color of your skin, and it will simply focus on, are you doing business? Are you contributing to the local economy? And let's move forward.
Stephen, I'm going to jump in with just a potentially controversial statement.
Yeah.
But I think really saying what Waldek is saying, but I think there's one issue that we really need to address. I do not believe that there is any more place in South Africa post-lockdown, post-COVID-19 for the restrictive BE measures that we have in our country.
Yeah.
If government refocuses on skills development and refocuses on an environment that enables business, growth will come and transformation will come. I think businesses have a role to play, certainly in achieving transformation, but I think overtly restrictive BE legislation that leads to window dressing has not served anyone. And there is no room for that in an environment where we so desperately need to grow our economy. And that's a very personal view. I just want to make clear that that's not necessarily that of PKF.
PKF. I'd like to continue down that rabbit hole with you for a moment, Theo, just on one question. I mean, what is being shown by COVID is the stark differences between the haves and the have-nots. And on the topic of South Africa being, having one of the highest Gini coefficients, having one of the highest levels of inequality in the world, do you see that gap widening post-COVID, or do you see that gap narrowing?
I definitely see that gap widening over the medium term. So much of shrinking that gap depends on a number of factors that we've already touched on, like the facilitating business, etc. But unfortunately, I do see that gap widening over the short term. I think there's absolutely no doubt that the middle class is really suffering. You mentioned earlier that the middle class, upper middle class, many of them business owners. By definition, if those businesses are suffering, those people will have their wealth eroded, and there will certainly be an impact on our middle class, which is so important for the survival of our economy. But equally, I think it will lead to a widening of the gap, and it's a simple maths in reality. Businesses will get to the point where they are laying off people. We already have massive numbers, such high unemployment in South Africa, and that is unfortunately going to increase over the medium term.
For sure. I tend to agree, unfortunately. Waldek, an interesting question for you. I'm sure you're familiar with the concept of what's called the Phillips curve, the point at which a populace can almost no longer tolerate any raises in tax. Now, as advisors to businesses, both yourselves and ourselves, us more as advisors to individuals, we sort of skirt that line between what's legal and what's not, as far as not paying tax is concerned. But how do you see? I mean, obviously, the debt that government has taken on, the relief measures, the slow growth, the almost no change to government expenditure, if anything, probably going up as far as greater grants and the likes are concerned. But government, I agree with you, Waldek, has very, very little room left to be jumping to the left. They have to be chasing a growth path, a growth policy that builds that. But minus or ignoring any potential broadening, at least in the short term, of the tax base, and businesses themselves that are constricted and not making profits. I mean, 3 months worth of lost income can wipe out a year's worth of profits in a moment. So there goes businesses' contribution to the fiscus. And as I say again, I mean, the perspective that we were at the top end of the Phillips curve. I mean, any additional raise in taxes will probably result in lower collection of taxes nonetheless. How do you see that situation evolving? And what are you advising your clients around that?
Look, I think it's a very interesting debate and discussion, because I think on one hand, one could look at, I know many people look at countries like Singapore and say, well, you should really raise your indirect taxes and drive your collections through that and lower your income taxes. But I think we've got to look at the landscape of South Africa. We're not Singapore. We're a far bigger country geographically. We're far more diverse and spread out. So it's not as easy to put exactly the same policies. But I do agree that our average SME is taxed up to the max at the moment. When you look at your effective tax rates between paying income tax and dividend tax of getting your money out of the company, we are some of the highest rates in the world. Your marginal rate for pay-as-you-earn at 45%. So from a worldwide perspective, there's very little room to maneuver. The one or two places where I could see government maybe raising tax rates would be on capital gains, because many jurisdictions worldwide have 100% inclusion on capital gains. Our capital gains are still taxed at either 80 40, or 66% or 40. So we have got room to maneuver there to kind of get us to par with the rest of the world on that tax regime. Our dividend tax rates are quite high already. So from that point of view, we are going to struggle. So I agree with you, there's very little room left. And there is that point at which it's, there is a discorrelation between increasing taxes and the collections, that the rate does drop off. And I think that to a big degree, there's already has been a mini tax revolt in the country, because many taxpayers know that the money that they are paying is not going to do good. It's simply going to line private pockets. So I think that there has been a low-level tax revolt in the country. So I think the best way to get your revenues up, in my mind, one is government needs to restore confidence of the business community. Business community needs to feel that the money that they're giving to government is being allocated to the right channels and being used for the right things. And that already is a good start in terms of getting your compliance levels up. And because, tax regulations are very complex, and we've all seen the examples of not just the SME market, but big corporates showing, profits on your annual financials of billions, but not paying any income tax because of various allowances and deductions. So, overseas, Apple's been famous for doing that, offshoring everything through to Ireland. So from that point of view, we're not unique, and it isn't just an SME discussion. I think government needs to show that business, small or large, can trust it, and they need to build that confidence, and that will go up. And the employment is, I think, a key one as well, because as much as small business in this country only contributes, I think, 6% to the tax collections from income tax, we contribute over 40% to the employment rate in the country. So I think closer to 60% of the employment in the country. So the tax collections of employment tax that get generated through SMEs are vital to SARS. And again, I think if the labor landscape was relaxed, and you would be able to hire and fire in an easier manner, maybe even if your income tax numbers are not up, you would find that your collections on employee tax would go up. Because the more that we can get our workers into the formal sector of the economy, the more of them become contributing taxpayers. And I think the country has got a big base of informal business, which is not under the umbrella of SARS or of government. And maybe one of the positives of COVID as well has been that one of the requirements to obtain the grants and funds has been that you have to be registered with SARS and the regular and the government bodies. And I think it's been quite a clever mechanism by SARS to get more businesses onto its books, as if to say. Yeah. So to cut a very long-winded story short, I do think it's a long road. I do think that Tito Mboweni knew about, he could sense, and I think he did the right thing, but not by not increasing taxes at the budget speech in February. There is an interim emergency budget, which will be, or a meeting which will be held, I think, in June.
Yeah,
to approve the different the mechanisms, because a lot of this 500 billion rand package has not actually been approved and promulgated. So
yes,
so that needs to be regularized and promulgated. And I think it'll be interesting to see if Tito makes any tax changes, but I would be surprised to see any in the interim, because simply I think he knows that that this is a dead donkey that we're beating at the moment.
of course. 100%. I tend to agree. I mean, obviously same would apply with regards to the medium-term budget policy statement in October. But fast forwarding potentially to next year, February, the standard national budget, please God, it's Tito who proposes that budget. But your views on the prospect of a wealth tax, besides the higher inclusion rate on CGT, what has been... I mean, it's something that's been bandied about. It's something that's been thrown out in the media. It's been something that's been pushed by the more left-leaning parties in government for a long time. Do you think we're seeing greater movements towards an out-and-out wealth tax, or would it potentially be the likes of higher capital gains tax, which in itself, in an environment like this, probably doesn't materialize because there hasn't really been much in the way of growth in asset prices?
It's so hard to predict, Waldek. I think the greatest insight from this is just the uncertainty that the COVID-19 environment has created in the world. I can tell you what I hope would happen, but I can't tell you that that's my forecast. I do believe that there will, come February next year, there will need to be some attempt by government to recoup. Now, it's also no secret that their collections, have not been as great as budgeted. So I think simply by, as Waldek pointed out, getting more people into the tax net through some of the measures that we've seen now, by improving the collection process, I think there is a bit that they can address there to make up some of the shortfalls. If I had to predict at this stage, this will be the optimistic prediction. If I had to predict at this stage, I don't see the introduction of just a flat-out wealth tax. I do think that the impact of that will be devastating, and I think certainly Tito Mboweni and hopefully some other people in our government have the sense to realize that. So that's certainly my hope, and it's my cautious prediction. Potentially a broadening of the tax base, potentially CGT, as we mentioned. I do think that they might want to touch VAT again. It's a relatively easy one for them to do.
And I think our VAT rates are on the low side of
relatively compared to some.
Developed. Some. I mean, if you look at a lot of European countries, are sitting between 22 to 25%. We're sitting at 15. Some African countries are sitting at 18. So I think there's room to look at VAT. What I would hope to do is that within the VAT regime, we actually create at the moment we've only got zero-rated exempt and normal VAT, standard rate goods. I think there should be a luxury goods VAT, but again, that needs to be weighed up with the import duties and taxes that are being collected. So many other countries have got much higher rates of tax on luxury goods, but they don't suffer from the same import duties. And at the moment, if let's say clothing is already being charged at 40% import duty, and on top of it you increase VAT, you're really pricing yourself. You're pricing that piece of good rather aggressively. So I think it needs to be weighed up. But I do think I agree with Theo that I think VAT will probably be one area that they're going to look at. Maybe broaden the base of zero-rated goods or exempt supplies, maybe have a 10% rate, and then maybe after that have maybe a 15 or 16% rate of goods, which again would be consumed by the wealthier and the middle class and the wealthy part of the country and the populace.
Sure, for sure. One question, almost we're nearly running out of time, but Theo, if I can ask you this question. I mean, the lockdown, it's a sensitive point. I mean, I'm not a smoker, so I can't relate to the empty promises of, smoking will be allowed in level 4 and then it's not going to be allowed in level 4. And now definitely not being allowed in level 3 either. But ignoring the hype points of that, by and large, I mean, we know that the lockdown has been catastrophic, but what do you think? What would you like to see happening as these levels ease, as the lockdown itself is eased? Number one, and number two, do you think that we're potentially at the stage or nearing the stage where if government doesn't end the lockdown, the people will end the lockdown themselves?
If you asked me that question a week ago, I would have said absolutely. I think I certainly sense
smokers and drinkers aside.
Yeah, smokers and drinkers aside, but I think just purely the need for people to return to work and to start earning money again, I think really started outweighing the risks that we were trying to manage through the lockdown. What I would like to see, a bit more certainty and clarity from government, less contradiction. So if you make an announcement, stick to it. I think smoking is, you can debate whether that should be allowed or selling cigarettes should be allowed or not allowed. But I think the point, smoking has become a metaphor for the broader conversation. It's the inconsistency and the lack of clarity and empty promises that is the issue. With certainty, businesses can plan. So if we have clarity around regulations, if we have clarity around what each level of the lockdown means, when we will go there, but equally, if government recognizes the devastating impact of going from a lower level back to a higher level and the impact of that on business, you can't start up a factory and then just shut it off again a week later. The cost of doing that in many environments is just prohibitive. So what I would like to see is clarity and consistency. Regardless of what the actual regulations are, when you know what they are and you know that they're going to be clearly expressed and consistently enforced, then you can plan around that. And if you can plan in a more stable environment, I think businesses will be able to manage. We need to, of course, maintain the response in terms of limiting the spread and just the inherent risks involved in South Africa. And I'm not going to get into a philosophical debate about the value of human life compared to livelihoods. But I do think that if government treated us more like adults and allowed us to work in environments where we put measures in place to protect our people and to contain the spread and to make sure that people get treatment when they need treatment, empower us as a population, treat us like adults, let us make decisions, but balanced decisions. By all means, have regulations that we have to apply in our workplaces, but just let us get back to work. So I really would like to see South Africa move through the levels a little bit more swiftly, but with very clear direction from government as to what businesses individually need to do to continue protecting people.
Fantastic point. I think Waldek, if you want to give some closing thoughts on your perspectives on.
Yeah, I think that we initially, when lockdown started, everyone was almost in shock and everyone assumed that this would be a short-term thing in our lives and it will disappear. I think as people and as business owners, we've come to the reality that COVID will be with us until there's a vaccine that's going to come out. And, when you look at all the different modeling that's being done in one could probably, at the moment, 20 models of COVID and arrive at 20 different answers. But I think one thing we know for sure is that up to at least the end of this year, we're going to have some form of lockdown, and we're going to be peaking again, and we're going to be coming off that. So this is the new normal in the short term that we have to live with. And we have to just simply, at some point, find that sweet spot of being safe, but being reasonable, and still have an economy to come back to after lockdown ends. So, I think that everyone's coming to grips with it, and I don't envy our president's position because he's got a very tall order. He's got to really juggle the different elements, and I think he's informed and he's relying on his people to inform him. So mistakes have been made, but at the same time, I think that hopefully we're going to reach more clarity, and we're going to balance it, because ultimately we can't afford to happen to us what's happened in Italy or what's happened in other countries, because we simply don't have the infrastructure and no country has the infrastructure to cope with the onslaught of what we've seen happen in other countries. I think we've done well to avoid it, but it simply now becomes a balancing act between the cost of lives and cost of doing business, that we have to reach that sweet spot. But I do certainly think it's doable. And I think, again, with using technology and relying on your providers and relying on experts around you to help to guide you and not, I think, leaving things too late. I think one of the problems that we've seen as well is that too many business owners leave things way too late. I would rather have someone be overly cautious and pessimistic, and let's get into your business and restructure it now and have you ready for the next 6 or 7 months, than only do it when you've run out of money and you've zero left in your bank account. So I do think that as business owners, as Theo said, we're used to volatility. Volatility is the name of the game in South Africa. So I think luckily this is just another element of volatility that we will deal with. We're going to get through this, but I think it's important that we as a business community and as professionals around the business community come together and unite to help each other in order to get through this.
Fantastic points. I think that, listening to you and it reminded me of the old quote that it's not necessarily the strongest or the fittest of the species that survives, but that is the most adaptable to change. And, without doubt, the biggest challenge we face at the moment is that we don't know what we don't know. With an uncertain future, those of us sitting within the advisory business, we make our living off advising clients around very uncertain futures. And managing that. But I think that the big point that we've been trying to convey is that, the risks are ever present, and the risks are going to be there whether we like them, we would like them or not. We can choose to bury our heads in the sand, which is foolish. We can choose to pretend that they don't exist, which I think in the context of the virus is potentially fatal. Or we can adapt a business plan or an approach that aims to manage and mitigate as much of that risk as possible. And Theo, you said it just now, that with any measure of certainty, businesses can plan. But I think that business owners and people like ourselves, we need to be looking for almost a variety of outcomes and planning accordingly. But not just finding that point and saying, oh my word, there's a challenge and I just can't move forward from here, because to stay static in a changing world is akin to moving backwards. And I think that the sentiments that both of you have shared with us goes a long way to please God helping our clients identify the clarity. It is there. It's really a case of it's blurred or obscured. Let's try and find where that clarity lies, and really start charting a course towards hopefully formulating a new plan. And adjusting and adapting to this new normal, and not expecting that the old normal is just going to be there in a different form. So there was one question that came up earlier in the conversation. If I can just draw everybody's attention to the chat bar, there is a post that Theo has posted with details on the PKF website. We will share that link as well. That there's more detail that if anybody wants, we can find, and we log in and explore. But the one question that was posted was a question with regards to that of businesses with foreign shareholders. Mark posted the question. He says, it seems as if one foreign or non-RSA shareholder on a company's board precludes that business from getting any funding. In their case, 3 of their shareholders are foreign, but all of the management and employees are South African citizens, and obviously they're looking to supplement local salaries and local working capital. How do you propose working around those limitations and restrictions, if at all?
Look, it's that if you look at the controlled foreign entity regulations pre even COVID, there have been inherent limitations on, and I don't really, and Mark, I'm happy to take this offline, because at the moment, if your company is more than 75% owned by foreign shareholders, it's classified as a controlled foreign entity, and it then has local limitations in terms of borrowing and in terms of, it's actually very difficult to get any funding from banks if you are majority foreign owned. So that's not just a COVID issue. That was a general regulation in the country, because simply banks cannot access the any surety should anything go bad. But in terms of TERS, I'd be surprised that you still can't get your TERS funds paid out.
It is. It's 100% shareholding, Waldek,
Okay.
unfortunately. So I went through that application process myself. So it is 100% South African shareholding. Mark, one word of advice that I would have for you is if your employees are registered for UIF, which I'm assuming they are based on your question, if your employees are registered for UIF, they are permitted to apply directly. So where it's not the UIF TERS funding that is directed towards the company. So I would advise certainly for the ones that you can, and your company can help them do that. You can go through the process of helping them complete the applications and the forms, etc. And they are eligible to apply for UIF even if they have received a portion of their earnings. So they don't have to be unemployed by definition. That's one of the sort of relaxations around the COVID-19 regulations. The other one for your working capital, that's a little bit more difficult to address. For that, your immediate point of access would be the loan funding that's available from the banks. But TERS definitely is RSA citizens only, unfortunately.
Thanks for clarifying that. One last question, and I don't know if it's specifically something that the two of you are adequately exposed to at best answer, but the talk about prescribed assets and government looking into using a portion of pension funds to fund A, government, B, potentially state-owned entities. A very hot topic, very controversial, very sensitive, very emotional. Do you see the talk of prescribed assets raising its head again into the future?
I do. I think we have to be careful with this one in particular because it is such a sensitive topic, and people react with great emotion to that. The moment you think of touching retirement funding, it just becomes a really emotive issue. I think we do need to balance our views, though, with regards to it's not uncommon for governments to have access to some pension funding. A lot of pension funds themselves will have money invested in government assets in any way.
Yes.
So I think we need to just balance that conversation. It's not all bad. I think I don't know where the conversation at government level sits at the moment, but the last time I was made aware of any level of conversation, the percentages that were being spoken about were relatively low by global standards. So certainly if that conversation is maintained, I don't think that is such a big issue and such a big risk in South Africa. So we just need to be careful because there's going to be a lot of emotion around that and perhaps an overreaction.
Well, look, and from an asset management side, the most attractive asset class at the moment has been government bonds post end of March. So it does put pay to that. I think that the where we've encountered the question has largely been drilling down not to the point of a minimum percentage of a pension fund being held in government assets, but really that to the likes of the state-owned entity debt. And that has been the area that we've been mostly concerned about. At any given point in time, with government being the underwriter of last resort within the fixed interest markets anyway, notwithstanding the attractiveness or relative attractiveness of government bond yields, it's the more sensitive topics, the more controversial topic of, do I have to hold 3% of my client's money in their retirement fund buying Eskom, PRASA, and SAA issued debt? And that's really the big question. By and large, if we look at the asset allocation moves that have been made over the last sort of 10 weeks or so, most of the funds, not pension funds, I'm talking unit trust funds, multi-asset funds out there, have actually taken on a fair amount of government debt, purely on the basis of the attractiveness of yields. At one point, your old bond was trading at 13% odd. Now, it's hard to ignore 13% yield in an environment where cash deposit yields are coming down. Global developed market bond yields are less than 1%, if not less than 0% in certain cases. And you've got this beacon of South African government debt, which is yielding 3 or 4% more than the average emerging market. That's not really where the topic of concern from our clients is coming. For most of the people we're engaging with, the concern is, do I have to now hold 5 or possibly 10% in state-owned entities? And therein lies our concern.
And I think we know that the challenge with South Africa is the administration and running and the state of our SOEs. I think in principle, when you look at other countries, one could argue that that's a workable model. But, our SOEs have proven to be nothing but a black hole into which funds are simply plowed. And again, if that's a very small component of your pension fund and you have a long period, you could argue you could recover from that because the other part of your pension funding might grow. Yeah. But let's say I'm close to my retirement age, and now you are forced to allocate a portion of my pension funding into an SOE, and that SOE goes into default or liquidates and it goes under. Now at this critical point in my life where I should be preserving my capital base has been reduced. So it is a recipe for disaster.
Sure. No doubt. I think that if I were to end the conversation on a famous line by the Iron Lady herself, Margaret Thatcher, where she said, socialism is a wonderful form of government until you've run out of other people's money. And let's hope that stems true within South Africa, that maybe over the next few years, please God, we can see a jump to the right as opposed to a jump to the left. Really a strengthening of democracy in our beautiful country, and maybe even Ramaphosa version 2.0. It would be a very, very interesting time, and with that, hopefully comes the associated opportunities for business owners, for entrepreneurs, and most importantly, those that are prepared to take some level of risk. Hopefully, the rewards are there. Certainly, up to people like us to keep navigating those waters, those choppy waters, and not avoiding them entirely. As my father once said to me, a ship is safe in the harbor, but that's not what ships were built for. So on that note, brilliant. I thank the two of you. Thank you for your time. Thank you for your insights. We look forward, please God, to having you again. Join us with as this new world and business unusual continues to evolve. And really, we can always benefit from gleaning from your really broad experience. So thank you very, very much. Thank you to all of our attendees. We'll be back on next week, Thursday, 10 o'clock, with a very, very exciting discussion. We have two representatives, asset managers from 91 Asset Management, formerly known as Investec, and we're going to be discussing the topic of risk. So looking forward to that in a big way. You guys are welcome to dial in. We'll gladly send you the link.
Thank you.
Everybody else, thanks for your time. I wish you all a safe day ahead, and enjoy. Please God, it only becomes clearer as time goes by. Thanks so much.
Thank you, guys. Thank you so much. Thank you to everyone.